Hello everyone, this is Jason, aka Junky. Hope this video finds you doing well. It's Monday, February the 4th, 2019. We're going to do a little bit of a market analysis for the week. I wanted to make this pre-market, but I had a meeting this morning right at market open at 9:30, so I was unable to do it pre-market. So you're getting it a little bit late, but we'll talk about what's going on in the market, what I think. First of all, if you're not subscribed to the channel, please subscribe to the channel. And also follow me on Twitter, because every week we go live and I announce on Twitter what time we're going to go live. And when we do the live event or live streaming, you tell me which chart you want me to look at in any market that I can pull up. And with this TradingView platform, I can pull up pretty much everything. So you tell me which chart you want me to look up, give me the symbol, and I'll pull it up, and then we'll do a top-down analysis on it, and I'll give you my opinion on the chart if that means anything to you. So follow me on Twitter, like the video, subscribe to the channel, that good stuff. All right, I want to talk about today about being nimble and being flexible in the market. And it's really important to be dynamic. You don't want to predetermine what you think the market should do. You react to what the market does. This is why I trade price action. Because in all my years of just studying the charts, what I found is there's commonality in price, and the patterns matter, yes, because patterns are basically a visual representation of human reaction taking place. This is what the charts do. It's just reflecting our reactions, and it gives us a visual cue to interpret that. So, for example, I've broken down that trading is really as simple as trading one section at a time. If the market's going to go up, let's look at this little section right here on SPY. I didn't even mean to put this in the video, but it's coming to me now, right? So if the market's going up, like it is right here, typically the move up, like, from here to here, is going to be larger than the move down. It's really that simple. That's what going up means. It goes up 100 points, it falls back 80 points, and then it goes back up another 100 points. You just gained 20 points. That's how it works. So that's the ebb and flow of the market, up, down, and that's what it does. And when the polarity changes and the direction is now down, you're doing the same thing, just in the opposite direction. So it doesn't always work one-to-one, 100% of the time that's how it's supposed to work. Market timing is the most important thing. Knowing the direction is easy. You can stick a moving average on a chart. You can zoom out and look at it. You can know direction at any given time, and it's never hard. The key is the timing. What is for your time horizon, for the length of the trade that you're taking, what is going to be the direction in the duration of your trade? And you have to line up the proper energies in the proper direction. And so I said all that to say, I'm gonna give you a couple examples. So I've been telling you for 2 weeks now that we're at a major resistance area. I would be uncomfortable buying in this zone for most of the stocks. I mean, I wouldn't buy the S&P at this level, period. Like the SPY, I wouldn't buy this particular ETF or this particular stock, but I may trade other stocks that I'm long on. I'm going to show you an example of a stock I went long on last week. So individual stocks I may go long, but this is a very strong resistance area based on a monthly chart. But that doesn't mean that intraday or within a week or whatever that the direction can't be up, okay? Because it's all about the time horizon and the duration of your trade. So the reason I started on this blank chart, because I didn't want to give you a precursor to what I was talking about, but take a look at my chart. This is my chart for SPY for this week. Anybody notice anything different? If you've been watching the videos, the first thing that you're going to notice is last week, these two blue lines were here. They were, I think there was one like around right here. I don't remember the exact numbers, but it was like 171 and 10 cents or something. And then the other one was down here somewhere. And these were my resistance for the weekly chart. Well, the weekly bias on the SPY has changed to up. So the polarity on a weekly level is up. So what that means does not mean that I think the market's going to continue to go up. Now, I will say this, when these lines, typically historically for me, when these lines disappear and they move from, this area to down here, and you're this close to the monthly resistance, chances are you do, a lot of time it at least comes up and touches the area, pierces it, something. So we may get a little bit more of a move up into this zone. I wouldn't be surprised if that happened. And what I tell you about the other stocks that I saw will kind of explain why it's pretty possible. But here's the thing. What this tells me now is there's going to be legitimate, serious support when price comes back down to this area. and I would be looking for a buy opportunity. Not necessarily for it to go all the way back up and make new highs. That's not what I'm saying. But it's my time horizon in any trade that I take is typically going to be 1 to 5 days most of the time, right? So for my purposes, we're just going to play this out. So let's say the market comes up a little further and then it gets a reaction, right? And I know it doesn't go straight down like that. And let's say we reach here and there's buyers here and then I'm a buyer, you know? And I think long-term the market's going down. That's what I think, okay? I could be wrong, but that's what I think. And then we get to this area, and let's say the market fails and comes back down and gives us a little baby test at the bottom and then gives us one of these. There's a couple things you should notice about this. Everyone can be right. You could have bought here if you knew to get out somewhere in here. I would never do that because it's too dangerous, too close. It's already in the zone. But, I mean, someone could do it if they traded momentum and you had a break. And I have a trade set up that I call a double cross. And I've gotten a few double crosses going to the upside in this zone right now at resistance. And if I took those trades, they're pretty high probability. I could probably hit 55 to 65% on those trades. I just don't like to do it in those zones. So, but, you know, you may be able to do it. But my point is, so you could buy here. You could be and then you could also be a seller here and still be right. You could be a buyer here. And then you could be a seller here, you know. And then you could be a buyer here, but that's a really low probability trade. I probably should have went this straight down. But being realistic in the market, this is typically what you see, these kinds of things. And so the two things about this is it's about being flexible. Yes, I think the market's going down from here. Anyone that watched the video on Saturday about the long-term projection of what I think the market's going to do, that's what I think is going to happen. But it takes time to do it. And there's a lot of trading and a lot of money to be made in the middle of that. You know, down doesn't mean straight down. I would be a seller here. I'd be a buyer here. And I'd be a seller here. That's my thing. Because long-term, I think it's going down, right? So if it came up here and made this high, when it came down here, there's serious support here. I'm not going to ignore this support just because it's in the face of, you know, a downward move off of a monthly resistance level. Because the very first time it touches this, if you just watch CNBC, and you listen to the people online, there's a lot of people that think we put in a bottom. Those people will be the ones here to buy. You'll get a reaction, and maybe it's not enough. Maybe the larger money that keeps pushing the price down will be here ready to sell it again, and it'll fail. But you can still make money in this move. Right? So you have to be flexible in the market, and you want to kind of, and I mean, I just made this up, you know, this thing could go all the way up here and invalidate all this. But if that happened, then, you know, when it retraces back, that would tell me that I need to switch my bias to a buy. And when it retraces back, I'd find the level that I should get back in to buy more. I'm not married to my opinion and my direction on the market. It's completely dynamic and based on what the market shows me. All right. So I think that's a very important thing for traders. So as far as SPY goes, I would not be surprised if we get a little bit of a push up into here. Again, I'm not buying here, but I wouldn't be surprised if we get a little bit of upward momentum into this area because the bias on a lot of my weekly charts changed to up this week. So this weekend was a really good week for me, and I wish I would have did this before I made the video on Saturday, but I hadn't done my weekly review and my monthly review because this weekend we actually changed months. So I had a chance to go back and look at all my monthly charts and change support and resistance on those charts as well, and a lot of them changed to up. So it's going to be an all-out war if price comes back down to this area and tries to, you know, push further. It's going to be a war down there. There's a lot of charts that put in support because of the move that we've had over the last month and a half. There's a lot, well, maybe not a month and a half, but a month and a week, you know, and there's a lot of support that's been created from that. And objectively, the way that I evaluate support and resistance, a lot of my charts have added weekly and monthly support down here. And the consolidation from last week actually created some support levels at the prices we're at now because the price is having such a hard time, you know, going sideways. There's actually been some support put in the polarity on weekly charts has changed to up on some of my charts. And I'll show you one of them. So I'm going to try and show an example of everything I'm talking about. So as far as SPY goes, my long-term opinion is still we're at resistance and we're going to see a turn. But there's serious support now down here. I would look to buy the bounce, and then I'd look to get short again going back down. That's what I'm looking for, and we'll see how it plays out. So let me show you Home Depot, and these are just going to be examples of being nimble. All right, I'm very uncomfortable with this trade, but if you look at this, the polarity on the weekly chart, these blue lines, these are the lines. This consolidation and breakout created support here. So I actually at these levels would be a buyer if I got a nice retracement back here and then I got a trigger, I'd look for a buy. In my opinion, not giving financial advice. This is just me going over the charts and viewing them the way that I see them, to get that out the way. But but the thing is, last week my resistance levels were here, right? But now I have support because my opinion is dynamic. I'm not married to any direction on the market. I let the market tell me what it's going to do. And that lowers your risk of being wrong all the time. If you try and tell the market what to do, it's going to tell you what it wants to do. And a lot of the times you're not going to like that result. 95% of the time, traders don't like that result, right? So you have to be dynamic. So my bias on a weekly polarity level is now up on Home Depot, but the monthly resistance is still here. But this type of room to get to the monthly resistance is a part of the reason why the SPY could continue to go up, because there's several charts just like this that put in support over this last week or so because of the consolidation, rebuilding energy, and then some moves to the upside. Now, it could all be a bull trap. That's what I've been calling it. I think this is a bull trap. It'll trap people in, and then eventually all the charts get to some type of resistance, and you're going to get the drop. Because we're just overextended. It's going up and it doesn't have a lot of steam behind it. But sideways moving action is a way to rebuild energy for a move further up. So we've had consolidation, and on a lot of charts, it's created this scenario where your support is not only down here at the bottom, but it's been created, kind of at the levels that we're at now. And I didn't see this on very many charts. Now I only follow about 80 something charts. But as far as they're almost all S&P 500 or NASDAQ stocks. And I'd say, it was maybe 10% of them I saw this level of support added. But I will say the monthly and weekly charts in general, the polarity changed to up on maybe 80% of them. So we're going to have serious support when price tries to go back down, whenever it does go back down. So, but this is an example where we actually created support at this level. All right. Let's look at NVIDIA. You guys remember last week I told you I thought I missed the trade because I had support down here, and I had support listed down here. The price broke down. I wasn't there that day to take the trade, but then the next day the market gave me an opportunity to get in. You see the little blue arrows. I accidentally entered the trade twice on accident, so I got a chance to get in on this red candle, and then I exited today. There's my red exit candle, right? Now, I told you last week about being nimble. This is a double lesson here, okay? My price target, typically markets turn around, 60 to 80% retracement level. My exit is always underneath the price that says that I could be wrong. Because typically, let's say that this market was going to continue down, right? Let me get this off the chart. So if it was gonna continue down, typically you're gonna find out around right here. What happens is price, fails. It gets a little, it loses upward momentum, and then you get a fall back down, and you'll retest, and then you never know where it's gonna go. So instead of trying to be right, because monthly resistance is all the way up here on the video. So one could say, if I bought here, I should be holding to this. And the thing is, it may go all the way to here. Now, I do have rules in my trading strategy that will have me re-enter the market again and scale into my position to get some of that move. But the initial move, I get out before I find out if I'm wrong or not. But this is an example of last week. The only trade, I think I had 2 trades, or 2 weeks ago. These are the only trades I had that were buy signals. Everything else was sell. Everything else was sell. So in the middle of me projecting that the market was bearish, I still bought, being flexible because my triggers told me to. And as a matter of fact, this was a very difficult trade to take for probably most people, because on the day that this happened was the day NVIDIA's stock dropped 14% and gapped all the way down. And it looks like a blue candle that's a hammer now, or a doji, or whatever you call that. But imagine what that looked like as price was going down to the levels that I was thinking about buying it. You don't have these candles here going up. All you have is this gap all the way down to here, and then this long red candle going down here. Are you pushing the buy button in the face of that? 90% of people aren't. And that's why it works. Because you identify support and resistance, learn how price moves. And I think I identified this last week. This was the beginning of a head and shoulders pattern. Shoulder, head, shoulder, right? You get a break of this neckline, you could go all the way up here. And you say, what does a head and shoulders pattern mean? What it means is price went down to a price, couldn't go any further. It gathered a bunch of momentum, pushed it a little bit further than it did the first time, and it rejected it again. And then it came down again, couldn't get down to the momentum push, and rejected again and failed and went back up. That means something. You know, it's a head and shoulders pattern visually, but in real world, real world application, it means something. The price keeps trying to go lower and it can't. The buyers keep coming in, so that's why head and shoulders means something. It's not just a pattern on the chart, right? So, but I'm not trying to predict whether it's going to break this neckline and go to here. That's not my way, the way that I trade. I like to trade multiple trades, a lot of trades. I take a lot. I probably get 40 trades a month. And they're all swing trades based off a daily chart. So I'm not day trading. You only have to evaluate the chart once a day and then pick your spots. But it's one of those things where I want to be right 65% of the time. I want my winners to be 1.5 to 2 times the size of my losers. And that equals profit every time. And that's my strategy. And so I don't try and be right. I don't want to predict the market. I don't want to make one move that's going to make me 10%. I'm not into that. I risk no more than 1% on a trade. And I enter every trade with a 2-to-1 risk reward ratio. So the most I'm ever going to make on a trade is 2% on the trade, on any one trade. Now I may have 2 trades on that leg up and that I make a combined, whatever that percentage is. But the point is, I don't try and be right. I'm just playing one section at a time. All right. So this was an example of me buying even in a bearish market, in my opinion, right? So that was last week. And then let's look at PFE, Pfizer. All right, so I took this trade on Friday, right? And so I sold here. What was my sell price? 42.82, right? But here's what's interesting about Pfizer, and this is where flexibility comes in. Last week I had resistance bars up here, weekly resistance, polarity was down. If you look at this one, this could be shaping up for another head and shoulders pattern. There's your shoulder, price went up, drove way down, and as you look at this, I had a second point and I never got back to it, but let me go to it in a second. But so price came down, made a low, came back up, didn't break the high, came down, made a lower low. Weekly polarity went to down. I had resistance in this area to sell it short. Friday came, I sold it short. Over the weekend, reviewing the charts, this level of a move backwards is enough of a retracement to actually break the polarity and change the direction to up. So now I have an upward bias on Pfizer. I'm already in a short trade though. This is where time, and this is the point I wanted to make. The other important aspect is timing. So because the market's polarity is up does not mean that the market's going to go up. There are retracements. It just means that the move up, in my opinion, should be further than the move down. So when the polarity changed to up on this chart, I'm in a sell position, but what I'm looking to do, if you look at where my take profit is, I'm looking to exit here. And you know what I will be doing as soon as I exit out of that trade? I will be looking for the reverse trigger to buy it back up. However, when I buy it back up, let's assume it comes down to, this middle of the range, I'm going to be out of the trade prior to this blue line on the buy. So let's assume the price comes down. I make a profit. I'm out of the trade. Price comes into this area. I get the trigger that I'm looking for and I buy it. I'm looking to get out before we get to this line. And the reason is, I don't want to predict whether it's supposed to keep going up, and I don't want to predict whether the trade that I'm in now is going to keep going down. I trade in between the decisions areas on the chart, and this is the path of least resistance, right? But the only way you're going to know where these levels are is a lot of market study on price action. It's almost like you have a crystal ball. If you were to sit next to me while I'm trading, you'd think I had a crystal ball. Because it's like I enter my trade and price comes to my spot and it turns there. And you're like, why did it do that? And I don't have indicators on my screen. I don't have any type of RSI reading or no oversold, no overbought. I just understand price because I've got thousands of hours of studying price movement. So if anybody's watching this, try and learn to trade price. Spend the time in the market. No matter what type of system that you're going to get, that you're going to follow, get a demo account. I really recommend TradingView. I think I've told you guys before, I paper trade on this account. I use this for my charting software, but this isn't where I actually enter my real-time financial trades. But I enter every trade that I'm going to, well, I try and enter every trade that I'm going to do on my real account onto TradingView as well, because this is the chart that I use to enter my trades. This is my charting software here. So it's nice to put my trades on here as well. But this is a paper trade account that the trades on this screen are on. This is not my real money account. Okay. But they're the same trades and it works the same way. So I would recommend everybody get a paper trading account. And before you start throwing money at the market and pay education fees by the market taking your money, practice learning to read price. And follow my videos. You're gonna learn a lot. I'm giving out a lot of free information. I'm gonna be really honest with you. The information I'm giving you, if I gave you more of the tools, you could probably make triple-digit returns every year with the information that I'm giving you for free right now on these videos. Okay, and I haven't given you the total playbook. No, I mean I have 10 different trade setups. There's rules, there's entries, there's position sizing techniques, there's all types of rules. So no, I'm not giving you the whole course, but the basic fundamentals of what I'm showing you here is the basic concept of how price moves, and it's very important. And if you learn it, you don't really need anything else. And I've gone back to charts to 1970s, and it works. Okay, learning to read the price works because it's telling you what the people in the market are doing real time, and it's leading. It's not reacting to what's already happened. All right, and so, but you have to be nimble, and your opinion has to be able to change. I've been telling you guys down, down, down for 2 weeks, and if the right things happen, I'm going to be telling you up, 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 because it's not about what I think, and it's not about me being right. It's about what the market is telling us to do and following those patterns. Okay, so this was a very preachy video. I didn't mean to preach to you guys, but this is just giving you some examples of being nimble in the market, and yeah. So this is what we're doing. So I think the market overall, my view, I mean, I could pull up QQQ, but I mean, it looks just like SPY. It's the same thing. This is resistance in this area. I think ultimately we're going to get a really big bounce downward. I think we have really legitimate, solid support for the bull case now. And I will be looking to buy down here, but I ultimately think that will fail and we will go back down. But the thing about that is that's going to take time. You know, I just drew in that little ugly scenario that I did a second ago. You know, this number right here. You know, but how much time is that? You know, let me see. I know I just made that up, but like if that was to happen, you know, that's 61 days. If it happened the way I just drew it, that's 61 days. We're talking 2 months from now. And, you know, Jason's been telling you the market's going down, it's going down. And, you know, for 4 months or 2 months, 2.5 months or whatever, and the market still hasn't broke this low. Well, it takes time. And during that time, there's all types of trade opportunities if you know how price moves. So study the charts, learn price action. It's important. And follow me. I'll show you a lot. You know, on every time we go live, you tell me which chart you want me to look at, and I'll break it down the way that I do it. And if you don't like that, you know, that's fine. You know, I'm accurate around 60% of the time, and my wins are almost 2 times as big as my losses. And if you pull a calculator out and do math on that, that's a pretty fantastic number. All right, so that's all I got for you today. I have another business meeting I have to go to, so I made this video real quick, and I'm going to spurt out of here and go handle some business. You guys have a wonderful rest of your day. Stay tuned to Twitter. I'll let you know when we're going live. I think it'll be Wednesday or Thursday. I don't know which day. Probably around the same time at night, 8 or 9 o'clock Eastern time. And we'll go over the charts midweek. All right, you guys have a wonderful one, and I'll talk to you soon.